The current unemployment rate sits at about 4.4%. That's quite low, and not a cause of concern for the Fed. Remember, one of their dual mandates is maximum employment, and 4 to 5% unemployment is about as low as it gets. However, the unemployment rate has been ticking up a bit since around mid-2022 when it sat at 3.6%. And the high level of uncertainty also has an impact on employment. Let's look back at the chart we opened with, showing economic uncertainty. If we overlay the NFIB 3-month hiring plans and invert it, we can see that uncertainty and hiring are closely linked. The more uncertainty, the less companies plan to hire. That could be a red flag. The extreme level of policy uncertainty we're seeing right now could very well accelerate that uptick in unemployment, putting pressure on the Fed to lower rates sooner than they intended to, in order to make borrowing less expensive so companies can hire more and employment can rise. And as hesitant as they are to lower rates too soon, they do have room to do so. The Fed funds rate currently sits at 4.3%, which is relatively high. That means there's room to cut. If the Fed wants to stabilize markets or cushion a slowdown, they've got the firepower. So if they have the firepower, why don't they use it? Well, there's also the other mandate the Fed has to keep an eye on, inflation. The Fed wants to keep it around 2%, low and steady. That keeps prices relatively stable while allowing the economy to grow. Despite fears that tariffs will raise prices, inflation has actually been falling for the past year or so. But there's an important measure of inflation that already has shot up thanks to tariffs, and that's expected inflation. Just look at this chart of one-year inflation expectations. It shows a massive jump over the past 6 months, as consumers weigh in tariffs on projected price increases. The Fed will be watching closely to see if this is just a transient panic or something else. As soon as prices do start to rise, if that happens, then the odds of a rate increase could also go up. The Fed will be hesitant to overreact or to move too soon because of the risk of recession, but they also don't want to see inflation get out of hand again.